How's it going, everyone? It's Sam. There are rumors that Coinbase and BlackRock are doing something fairly shady. I want to talk about that. Also talk about the inflows from yesterday and the big week ahead. We actually have Tom Lee talking about the week ahead and the next few weeks. Tom Lee, head of Fundstrat, has been really, I'd say, right on with a lot of the predictions for the year. Where a lot of people were bearish, he's been quite bullish. So I want to talk about that and show you the clip. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. Also, there's a link underneath the video to Margex where you can start trading cryptocurrency using leverage. I think it's really important to have multiple exchanges set up where you can trade if you are a trader. So even if you have another platform that you like, sign up for another one. There's no KYC, there's no VPN. They're also doing a big Caspa airdrop where you can get potentially thousands of dollars in free Caspa tokens. So check that out underneath the video. If you don't like that, you can sign up for some like WEEX or Blowfin or CoinW. Those are underneath the video as well. Let's start here. We had a good day for Bitcoin yesterday. It's up 2.5% right now. And it was up even higher yesterday and earlier today. Now, we had some pretty big volume yesterday with IBIT over $1 billion. And we had some pretty good inflows too. GBTC actually had a positive day. That's when you know things are set up to be pretty good, is when GBTC comes in first and it has a plus $7 million day. BITB with a plus $43 million day. ARCB plus $99 million. HODL 5 million, EasyBC 5 million, Fidelity 101 million, Burr with 1.7 million. So we were at plus 263 million or 4.4 thousand Bitcoin so far. That's 10 days issuance basically. And then IBIT took longer than usual. It took a couple hours longer and they had zero inflows, which is so odd. They've been odd for the last week and a half, maybe even 2 weeks, where they've had multiple days. Let me just make sure everything's still recording here. Okay, good. They've had multiple days where they did not follow the pack. They did not have their typical inflow day. They even had a couple outflow days recently. And they have been, obviously, the entity taking in the most volume. They have been taking in the most in inflows from the beginning of this. They've been pushing clients to buy, and it still is so odd to me that they have these $0 days. I've never seen someone ask Larry Fink, like, okay, how do you trade $1.1 billion and not have 1 million in or out? Now, up to this point, my thought had been basically on days that they have outflows, they maybe have someone buying, right? Like, okay, they're going to be a negative $100 million day. They have someone that says, whenever there's a red day, we'll just buy it so that you're at zero inflows. Or maybe they do it themselves. The other side of that is maybe they have someone doing the opposite too. Maybe when they have clients that want to take some money off the table, they say, okay, whenever you have a positive day, depending on the size of it and the market conditions, we're looking to sell. So we'll bring you back down to zero. I almost think that's what has to be happening. There are some people thinking there's something a little bit sinister going on as well. Tyler Durden, who's a big personality over on Twitter, says, I told everyone I went through the chain. I mean, it's a public ledger. Literally anyone can do it. Coinbase are writing IOUs for BlackRock. Now everyone is waking up and hopefully Coinbase has a bank run. Okay. Justin Sun says, CBBTC, I'm assuming Coinbase BTC, lacks proof of reserves, no audits, and can freeze anyone's balance anytime. Essentially, it's a trust me. Any U.S. government subpoena could seize all your Bitcoin. There's no better representation of central bank Bitcoin than this. It's a dark day for BTC. And then the Bitcoin therapist says, rumors are circulating that Coinbase is writing Bitcoin IOUs for BlackRock, and they're suppressing price. Now, let me be clear, this is not necessarily my opinion, right? This is a little bit conspiratorial, but these are some large Twitter accounts pushing this idea around. Justin Sun, obviously, is in the crypto space himself. Not super well thought of by a lot of people. A lot of people think that he's a bit of a scammer. But it does remind you, hey, first of all, get your Bitcoin off exchanges, right? Like the only Bitcoin that should be on exchanges is the Bitcoin that you're trading with. Same thing with crypto in general. Like just keep the crypto on exchanges that you are trading with, because at the end of the day, if you have it on an exchange, there are multiple levels of risk, whether it's regulation risk, whether it is government risk, whether it's just counterparty risk with the exchange, right? Now, I don't know really if Coinbase is suppressing price. Supposedly, they have I think it's around 1 million Bitcoin, something like that, like an insane amount of Bitcoin. Obviously, that's not all theirs, right? A lot of it's just held on their exchange. And obviously, there are multiple layers to this, but Coinbase wants the price of crypto to go up, right? Unless they owe a bunch of people crypto and they don't have it, and they thought maybe they could arbitrage it by waiting a little bit for a dip or suppressing the price to then go buy it at a cheaper price, something like that. But just in general, their company does much better if Bitcoin's price goes up, if altcoins go up, right? They've been around for a long time. They are audited, right? I've got to think that part of the regulation of just being a company in this space that's publicly traded is that some government entity knows where the Bitcoin's at, right? That they check it, they make sure that they have it. But it is going to be fascinating to watch what happens moving forward. I personally think that they're fine, right? I still think Coinbase is the most reputable exchange out there in terms of just like buying spot. It's the largest, it's most regulated. Now that also means that they aren't super agile. They can't do a lot of stuff like I've talked about before with Margex. There's no KYC, so you don't have to give up your personal information, right? Which is very helpful for some people. They don't want to be tied exactly to their crypto bags. Also, you can use different forms of collateral. You can leverage trade. So you can do that kind of stuff. Coinbase has a lot of regulations, but it's just something to pay attention to, right? Keep an open ear. I think the last cycle, if it taught us anything, it's like keep your ear to the ground if there are rumblings about something and they get worse and worse. And then you start seeing financial products fall down. Like if all of a sudden Coinbase is down 50%, like the stock on Monday, like there's something happening. So that is when, if you have some crypto on Coinbase, like get it out, right? That's my opinion. Of course, you could always do that before then, but if you want to keep some on for various reasons, I know there are a ton of reasons why you might want to keep some on an exchange. Just something to pay attention to, right? Not trying to incite fear or anything like that. Just saying, like, pay attention to this stuff. If you have crypto on an exchange, you have to pay attention to this stuff. Okay, only 5.93% remaining. 5.93% of the Bitcoin supply remaining. This was 5.94 6 days ago. So consistently, there's more Bitcoin that's mined each day, and we have 5.93% left. Not a ton, I'll tell you that much. 5.93% left, 94.07 that's hit the market. That's over the last 15 years. 15 years, the price of Bitcoin has gone up to 60,000 per Bitcoin. When 94% of the supply has hit the market, there's only 6% left. What do you think is going to happen over the next 15 years? Let me know down below in the comment section. Also, how likely do you think this prediction is? 20,000, 2017, 69,000 in 2021. If you just draw a straight line, that would take us to 250,000 in 2025. I'd like that. I'd like that a lot. Let me play this clip for you. This is Tom Lee talking about the next few weeks within crypto. Also, if you're this far in the video, let me know what you're drinking. I'm drinking some Starbucks ground coffee. I'm not the biggest fan of Starbucks coffee, but I was at the checkout line and realized I need some more. So yeah, that's what we're going with today. Let me know what you're drinking down below in the comment section. Let me play this for you.
On today's action with our first guest, Fundstrat Global Advisors co-founder and CNBC contributor, Tom Lee. Tom, the small caps that I know you're watching closely had a good day. But, I mean, is it September or is it not September, right? We had a rough start, and now some of that's in the rearview mirror.
Yeah, I mean, I think if viewers are sort of confused, I think that's what the next 8 weeks are going to be like into Election Day. I think it's a very challenging period because no one can have conviction until they really know who's in the White House. But there are some positive sort of supports coming into play, and next week is the Fed meeting. We know the Fed is going to make some cuts. And with the inflation data being supportive and the labor markets needing some support, I think it's going to give the markets some confidence. So I think we do kind of trade well into that meeting and maybe even the week or two after.
Does the market need a 50 basis point cut to stay within that 5,300 to 5,700 range that you think we're going to bounce around in?
You know, I think that a 25 or 50 has both hawkish or dovish implications.
Right.
So I think it's ultimately whether Fed Chair Powell comes across as this is the start of a cycle where they're confident that we're moving back towards neutral. And whatever number they make is actually quite dovish and positive. But if it seems like this is dragging along the FOMC members, and then there's even concerns about a hard landing, then I think the market can view anything they do as negative. I think it's going to come out positive, though. But
I mean, it seems like the Fed chatter would be in that direction. They didn't want people to get too excited about too much in terms of rate cuts. But now that they're there, it seems like they're signaling that they're kind of on a path.
Yes, that's right. But from a market's perspective, I think that they'd like to see the Fed sort of acknowledge that inflation is moving back as a secondary concern, and supporting labor markets while not in a recession is incredibly important. So I think that you're right. There's a chance that this could all be interpreted negatively if the Fed seems really reluctant to cut.
Most people ought to be investors, not traders. So are we up against, whether we're talking about the Fed or even about the election, a potential narrative shift in the markets or no?
I think in the near term, we're losing visibility. And, when you don't have visibility, people get scared and they sit on their hands. But over the next 12 months, I think investors should be pretty confident. When the Fed has cut rates while in a soft landing or no landing, the win ratio or markets higher 6 months, 9 months, 12 months later is almost 100%. And we also know post-election markets almost always rally. So the November, December looks pretty good. And I think the policies of both candidates is good enough for markets to do well next year. So I think we might have turbulence now, but it looks pretty good after that.
Now, back to that turbulence, for people who are trading, it's been a weird September because usually when the month starts bad, it's bad. But we have this situation. How do you read it?
Well, yeah, you're right. If you took the 10 worst first week of September, it's like the 10 times the September was down 2.5% or more. 10 out of 10 times the market never finished positive.
For the month?
For the month. In fact, if you took the 20 worst first weeks of September, 20 out of 20, September was a down month. So, however, 3 out of 10 times from the 5th day, which would have been Monday, to the end of the month, you actually clawed back gains. You just didn't finish the month positive. So I think it's a strange seasonal. I might just say, to me, next week is more important because it's the Fed and the put coming into play, and that might be the dominant factor for the rest of the month, and that could be quite a support for markets.
So let's talk about some broader issues, particularly mega caps versus small caps. We saw a big comeback for NVIDIA. We saw really some continued flexing strength from the likes of Apple, which is now, I would say, firmly on top in the market cap race, such as it is. And then we've seen small caps struggle more than some might have hoped. So today is an exception. Which is more influential in this market?
They're both important, and they reflect different, investor views. I think you still always want to own the best companies in the most important themes. I mean, that's NVIDIA and that's Apple. And they're going to really work over any cycle. But when the market begins to believe the Fed is going to move rates back towards neutral, and that's both cost of money, mortgages, auto loan rates, these are really big tailwinds for cyclical stocks and small caps in particular. So I think that's why I'd still want to make a very educated bet with high probability that small caps could do very well the next 12 months, and even between now and year end.
Tom Lee says that this next week is very important with how the Fed speaks, how they approach the rate cycle, right? Do they say that the job market is more important now? We're more concerned about that than inflation. That shows really, even if there's some kind of, I don't know, mildly concerning, or there's some kind of report that comes up that's not great on inflation, it shows that they're focusing on making sure the job market is strong, which means a couple different things. First of all, it means that they're not actually that worried about inflation anymore, which means that we're past that. That also means there could be some kind of stimulus in the future, and there would be more liquidity in the system because they are lowering rates. That also means that we could stick this soft landing. No, I know that we've given them a hard time. The Fed has gotten a lot of backlash about how long they've kept rates high, but so far things look pretty good. I know that the job market, and there are some people that are having a very hard time getting a job. That's all kind of part of the bigger plan, unfortunately, for some people. But so far, when you approach it from a whole U.S. standpoint, they've done a decent job, I think, with what they were given. Let me know your thoughts on that underneath the video, though. This does signal, though, that if they start lowering rates throughout the rest of the year, into next year, maybe throughout all of next year, it should be good for risk-on assets. Let me know your thoughts. Thank you so much for watching. There is that link to Margex underneath the video in case you want to trade crypto. And make sure that you are safe out there. Hope you're all having a great day. Again, let me know what you're drinking down below in the comments section. I'll see y'all in the next video.